BC show. What's going on? We got a few people in the chat already. Well, not in the chat. We got people watching already. So be sure to hit that like and subscribe button so we can show it to more people. Ooh, I forgot I left my headphones in. Sorry about that. I wish I could say there's like super duper duper exciting things going on the chain, but there really isn't. Well, it's really, I could probably tighten that up a little bit. I'll zoom in a little bit there. How's everyone doing today? Let me know in the chat how you're doing, how your day's going, how you're feeling about crypto right now. We're going to look at the crypto charts, among other things. Really interesting. I want to do a little follow-up on the Gainify situation on Algorand. We'll definitely talk about that today because that's very interesting. I was in a spaces this week where we talked about more of that kind of stuff. And yeah, it was really interesting. There's a lot more to it, and I got some more information about the situation. So did a little reporting on Twitter Spaces, so I can let you know how that goes. Otherwise, yeah, crypto is kind of like, it's kind of the Bitcoin show right now. And Bitcoin, the show is that Bitcoin is kind of ducking the trend that's going on overall in the market. So it's very interesting to me. By the way, we're starting a little bit later today because I had some business to take care of in the morning, and I ate some quick lunch and then took my dog for a walk. And now we are starting. So also, one of the big things I want to talk today about is the there's a new lawsuit against Coinbase. It is not from the SEC. It's from another entity. So we'll dive into that news and find out what's going on there. Why is Coinbase being sued again? Got a little Ripple news to cover today, as well as some Solana news. So we're going all over the place. Oh, and Hyperliquidity. These are all from the block. I'm going to save these. I just thought they're all interesting things to look at. Plus, we'll find a couple Algorand things to talk about too. But yeah, if you haven't hit the like and subscribe button already, appreciate you do so. And leave us chat wherever you are, whether you're on. We are live on YouTube and Kick and Twitch. I'm currently testing out Kick and Twitch, and I'm going to find out which one I'm going to stick with. And once I'm done with that, I'm going to start streaming on X again, but I want to pick one or the other. Right now, I'm kind of testing them against each other. I seem to be getting more views on Twitch than Kick, even though I have actual followers on Kick. So something to keep in mind. And if you want to, you can, with your views and with your comments and stuff like that, you can kind of vote on whether you want me to stream on Kick or Twitch. So let me know what you think about that. Be sure to, if you are watching on there, leave me a comment from there, and I'll be able to see which one's more popular. The problem is Kick gives more of has a better rev share model. They actually give you more of the money you earn. They don't keep as much, but Twitch has a obviously much bigger market. I mean, it's like, I think it's a couple million to 180 million or something like that. It's significant. I can't remember when I looked it up, but quite significant. So it's kind of a tough call. And Twitch actually has a crypto designation, which I did not know about until recently. So yeah, leave your comments. Otherwise, yeah, why don't we just dig into the markets and not waste too much time here? Probably go for about an hour and a half. So a lot of green, and you might be fooled into thinking that green means that things are going well, but not really. And if you look at the market cap, we're down just a touch. The coin market cap 100 down just a touch, almost exactly the same as the overall market cap, maybe just a little bit more. And Bitcoin dominance still really, really high. And it's interesting. I was listening to the Wolf of All Streets today, and they were talking about how Bitcoin is at a spot that has a dominance that we haven't seen since like the worst of the bear market. And it's strange because we couldn't have a more positive regulatory environment for, like, the fundamentals are as good as they've ever been, possibly with the exception, I would say, of, I think the recent wave of meme coin scams, the celebrity coin scams, I think really put a sour taste in people's mouth about crypto. And I've heard other people kind of discount that. I think that makes a big difference. I really do. Because what you need for a big bull run is you need normies to get excited about crypto. You need people that otherwise hadn't really been paying a lot of attention. You need them to really dive in and start pouring their money into Bitcoin. That's what, and altcoins and all this other stuff. If we've just been flat, if you look at Bitcoin, let's pull up Bitcoin for a second here. I'm not going to get into the trading charts yet. We'll get into that in a little bit. And I talk about trading on a really low level, just to be clear, but let's just look at a year. I mean, definitely up on a year, but not that much. And we've been over 100,000, so it doesn't feel great to be at 85. It's not bad. It's better than a year ago. And remember, about a year and a half ago, we were probably in the 30s. So I mean, my average buy comes out to about 33,000 something. I've actually switched, by the way. It's probably a good time to talk about this now. I've actually switched on my Bitcoin. I'm not going to do profit taking anymore. I've just decided to do little weekly buys of Bitcoin. And that's the end of it. So that's all I'm going to do. Just little weekly buys of Bitcoin. And I'm just going to buy and hold from Bitcoin from now on. So I'm not going to do any trading until if it's at a point where there's so much in there that it would change my life, which I think is really good. I heard someone else say that, and I think that's a pretty good metric. That kind of encapsulates sort of where I was thinking anyway. I think Bitcoin is just going to increasingly be the coin of strategic reserve. I think you're going to see more companies doing that. It's going to be common. So I think Bitcoin is just going to be a good long-term buy and hold. And it's kind of like I'm doing for Algorand, but not quite. Algorand is more about DeFi for me, so it's not quite the same thing. But otherwise, yeah, my other alts are still kind of up for grabs. When they pump, I will take profits. Anyway, let's go to TradingView and take a look at this. Let's see. Can we see the whole thing here? No, we can't. Hold on. Move this down here. And let's see. Are we on that? Nope. Let's go to the 4-hour chart. And let's put on our Bollinger Bands and our RSI. Now, as far as trading is concerned, this is kind of no man's land. We're right in the middle, right on the SMA. So not a lot of, shorts or longs you could really make here. We're just sort of stuck in the middle. Not the most exciting time. Where we see stuff like this is what I get excited about. And you see especially 19, anything below 30, you probably got a pump coming. Although it's interesting how this one double pumped. You might be fooled that you missed it. But set your trades, we were down at 75. So if you set it at 80, yeah, you would have hit it. Really, you'd have hit it back here because you had a candle going past that. So, buy and sell orders are kind of your bread and butter for doing this. This is really simple. It's a really simple trading strategy that I do. And, you have to put big money in to make money on it. So you would have to do this over and over, but it does work. I saw this from another trader and I've been trying it out and it does work. But anyway, yeah, sitting in that middle zone right now, right on the SMA. So not much to be excited about there. Let's go to the rest of crypto and just see where we're at. Now, who's done really well over the last 24 hours? It is Mantra, Ohm. And that's an interesting one because look at that chart on the right here. Well, now you can't see it. Hold on, let me, that's probably good. Mantra had such a weird week. That pull up there. Yeah, that's the 1 day. We got to pull up the 7-day here. Sentiment at 60%. That's pretty impressive considering this happened. In fact, why don't we, I read about this, but I just can't remember exactly. After Mantra suffered a 90% collapse, co-founder JP Mullins joins Coinage to explain what went wrong. Now, the video is gone for some reason. I'm not really sure why. Mantra co-founder John Patrick Mullen says he was asleep when the Ohm token sell-off started. By the time he woke up in his hotel room, the token powering his real-world asset-focused blockchain has already crashed by more than 80%, wiping out billions in market cap on paper and sparking confusion across the crypto world. Mullen joined Coinage for a new interview to shed light on decisions that were made into the collapse, which he attributes to massive forced liquidations in a low liquidity environment on a Sunday night. But the uncomfortable truth for the entire crypto industry may be that much of what unfolded in a day may stem from the project's own decisions in the years leading up to this weekend, the ones that countless other projects have similarly made around token structure, liquidity, transparency for holders. I guess that's, I'm trying to like parse out what that actually means, because I understand. Oh, geez. You know what, guys? I gotta, I'll be right back. Okay. Give me 5 minutes. All right. Sorry about that. Actually, let's go back to here. So, um, here's the thing. Like, I don't, but you can't just like throw out something like this, like saying, the project's own decisions in the years leading up to the weekend, the ones that countless other projects have made around token structure, liquidity, transparency. You have to like that doesn't tell me anything. Like if you're gonna put something like that out there, I think you got to say like what it is, what happened. You know, what about the tokenization made it that way? You know, you're not really saying anything. Mantra's investors, Mullen, and the project have so far been united in their defense that the Ohm token collapse was not triggered by any insider selling, but rather by a mass liquidation on one exchange. But Mullen declined the name to name the exchange in question. Well, why not just say it? People are going to find it out. You know, a little on-chain sleuthing could probably figure out where it happened. So why not just tell people and save us the trouble? That's really strange. These were all clean, fresh, unmarked wallets. I label all the wallets that I'm aware of on Etherscan so I could easily track everything. Okay. Here lies the problem. Mantra was a bit unique in the sense that not only did it have native tokens on its own layer 1 blockchain since last year, but also millions of Ohm tokens were launched years earlier as ERC20 tokens on the Ethereum blockchain. Okay, so that's a real concrete thing. I find this really frustrating, and I know why they do it, okay? I know why they do it. There's a reason why they do this, because Algorand had the same thing. When LimeWire launched on Algorand, everyone was really, really excited. They thought, oh, LimeWire's back. This is awesome. And it's great. They're going to be using Algorand. Awesome. First thing they do, their first batch of NFTs were launched on Ethereum. Why? It's crazy. Why would you do that? So, you know, we're all excited about Algorand, and then it's like, oh, but this is going to be on Ethereum. It's like, and they got money from the foundation too. I can tell you that Algorand folks were not happy. Now, this was like a couple years ago now. They were not happy. So it's fine. Okay, so then it says, yeah, Mantra had set up the ability for users to bridge tokens to various other blockchains, including Polygon Base and Mantra's own L1. I mean, that's fine. I don't mind bridging, but if you're going to launch a coin, just launch a damn coin. Launch a damn layer 1. Don't sit there and be like, oh, we're starting this new thing, but we're also going to rely on Ethereum. I mean, this is why I can't take some of these projects seriously. This is it's just a bad idea. You know, Algorand launched, and it's just Algorand. That's all it is. That's what it should be. Anyway, after the collapse, Binance, which had listed Ohm, tried to clarify that it had taken issue with Mantra's token supply in January and had warned users on its site. Since January this year, Binance had also issued a pop-up warning for Ohm on its spot trading page to inform users that the token has undergone significant changes to its tokenomics and increased its supply, the exchange wrote on X. Mullen rejected any suggestion of artificial price manipulation, saying, we never engaged in any sort of pumping of the price or pumping of the token with our market making partners. This is not how it works. But even he concedes the obvious. I don't think the positions that market makers had were capable of handling this massive forced selling. I'm sorry, am I missing it? What's the forced selling? Is it that well, it's the exchange, but why? Why was there a mass liquidation? Did they decide, you know what, we don't want to deal with this coin? Is that what happened? JP Mullen says, I mean, 99.9% of the crypto industry thought we were dead. At this point, happy. We had more than 15 people voting on governance in those days. Either way, supply doubled over 5 months ago. The market, this is from April 10th. The market knew about it for years. This isn't new. Not new. It's not, okay, hold on. There's not a lawsuit around Algorand. There's other Algorand and other crypto news. It's not, I didn't say it was Algorand. I have Bitcoin, I have Algorand, and I have Hedera on the cover to make that clear that this is not just a Algorand video. Anyway, it's not new, but the effects haven't become apparent yet. Anyways, I would always expect you to go around tweeting to the community, Ohm is a bad investment, but it's something they should probably know. Or I wouldn't expect you to do that. I know, so shouldn't and don't tweet. Yeah, me too. Yeah, glad there's no lawsuit on. No, it's another platform. It's a pretty big platform on Coinbase. It's on Coinbase. I already talked about that at the beginning of the show, so I can tease it up like that. Yeah, Coinbase is facing another lawsuit, and we'll show from who in a minute. Actually, Algorand's been pretty devoid of lawsuits. I know there was that snafu with Arlington Capital, but I don't think there was any lawsuit. There was like an NDA that covers it. Anyway, haha, I also shouldn't and don't tweet Ohm is a good investment. That's also not good. Either way, we've been transparent with our tokenomics from day one since release, and recently released another report for the community. Just 3 days later, $5 billion in paper value is erased as Ohm cratered. So this was right before it cratered. And that's what happened. So basically it was an exchange that decided to just liquidate. But it's kind of surprising to me. Does he say more? I'm just really curious about this. There's a little thing here, so I'm gonna put on my headphones and let's watch this video.
Market value aside, this is not something that I would ever feel relieved about.
Okay, this is a really long video, so I don't know how much we'll get through, but I just want to get to the explanation.
I mean, an unprecedented event happened. Many people lost money and got hurt. I'm hurt. I feel like our community is hurt. Our token holders are hurt. Our investors are hurt. And I feel responsible, even if I didn't do anything negligent or malicious or anything.
I am curious though, if your investors, when you say your investors are hurt, like I wonder if they're actually down necessarily, even if it is trading at 70 cents. Like you said, you've been through the
I think they're still not down. And that's why, again, investors who had liquid tokens still haven't sold any liquid tokens.
Welcome in, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City. A lot going on in crypto right now, but this weekend, the wider world is reacting to know what you guys have been trying to work on.
Yeah, here's where he starts talking about it, so we're going to skip ahead.
It's a layer one protocol tied to real world assets. You guys are based, I believe, in Dubai is where you spend most of your time, the UAE, in terms of who you've been working with, and what this project's all about is tokenizing real world assets. But before even your guys' layer one launched last year, there was basically years before that with the Ohm token as an ERC 20, I believe, in terms of Ethereum token being implied here. So why don't we go back to the beginning in terms of what went into this? Because as I was looking through it, there were a lot of tokens that were kind of on a bunch of different chains. I mean, I'm curious to know if you've identified more about, you mentioned an exchange here, who was kind of involved in terms of, if it's not your investors and you haven't sold, which again, to your point, I haven't seen that, but what did you learn more about kind of that piece of this?
Maybe I'll just kind of walk you through the founding of Mantra and how it all came to be, and then you can kind of understand the dynamics of the two, the ERC versus the main.
Okay, he's gonna make us go through the whole history. Like, I just want the answer.
Netcoin, right? So Mantra was started in early 2020 during the middle of COVID. We launched Ohm ERC version August 18th, 2020. So it's almost a 5-year-old project at this stage. We got listed on Binance in March of 21. We'd initially launched as a DeFi protocol and built out some products in the early days. Obviously, we rode that kind of initial DeFi summer wave up, and we rode it all the way down to. Mantra suffered significant retraction where we were, at one point in 2023, going through the bear market, I think at 1.7 cents in October of 2023. Around the end of 2023 and beginning of 24, I met with some of our key partners now that we work with, including Sharuk, which is a UAE-based fund, and Laser Digital, which is the crypto arm of Nomura. And they kind of helped us raise some institutional capital to really bring this idea together of basically a permissioned DeFi protocol. And we've been going through licensing with VARA at the time, the Dubai regulator. We actually got our licensing issued earlier this year for the first ever DeFi licensing approval in history. And this other layer one blockchain that was meant for tokenization that had inbuilt compliance and permissioning and identity layers included. So around that time is when we came out and tried to put these token models together. They were initially going to be run separately. So we had the Mantra token on ERC, and we're initially going to launch the chain called Omega, and we're going to have AUM token. And during this time is when we kind of brought those two things together. We had the community vote on this, and they said, hey, we would prefer to have all of the support for OM, rather than two tokens. And that's when these things came together, and we started working on how can we develop an institutional real world asset business in the UAE. We had some major announcements over the last months with MAG, with Damak Group for our real estate initiatives. We obviously got our licensing in Dubai with VARA. And we launched our chain at the end of last year. So around that time is when the chain launched. We started going through a bridging process. And, now we basically have the ERC token, which at the time when we launched the chain was, I think, 95, 96% in circulation. Now it's like 98% in circulation. It was a hard capped ERC token, 8888 million. All of that is obviously verifiable on Etherscan. You can see where the wallets sit. Many of them are exchanges and other labeled wallets. And then we also have a supply on the mainnet side. And on the mainnet side, the vast majority of these tokens are, locked in custody, including with, qualified custodians like Anchorage, and enforced vesting with these third parties. So all this stuff has been, verified. We have a transparency report we actually put out just last week, because people were asking for some specifics and details. We'll continue to provide as much transparency about wallets and things as possible. But yeah, basically you have ERC tokens, and they've been bridged to, I think they're on Polygon through the Polygon POS bridge. Binance has,
I really feel like we don't need another coin. Like, can we just stop launching new coins? We don't need them. Unless it does something fundamentally different. We just simply do not need more tokens. Like, there's plenty out there. They work fine. Unless you have something that like absolutely shatters the technology standard, we just don't need it. And this is one more example of a coin that we don't need.
So it has a BSC version of the Ohm token on BSC, and there's also a base Ohm, but it's all part of that existing ERC 8888 million supply.
Yeah, and I think that's kind of what's interesting as I looked into this too, in terms of kind of some of the mirroring pieces as well. You took kind of some of those tokens and mirrored them to the new chain. If someone wanted to take tokens, and these tokens existing on a could leverage, as it sounds like you were get liquidated, there can be a process. Someone out there on an exchange, they have a very large position. Exchange says, hey, you're going to get liquidated. There can be a process when that happens. It sounds like this basically was okay. That large position was liquidated, and then that floods the market with a bunch of Ohm tokens that then push the price down. And so, did you learn more about A, who that person may have been, B, which exchange, what that process looked? Were you notified before that liquidation took place?
So we'd been in touch with exchanges prior, asking about like, hey, when do tokens get put on exchange? Like, do you know these wallets? Do you know who this is, part of? And is it the theme? Is it market makers, et cetera? So in this particular instance, we've been asked by several different exchanges what was going on. And this is not from like the last 24 hours, but this has been over the last, months actually. And we don't know. Particularly in the last 24 hours, we had been in touch with several exchanges asking about where these tokens are coming from us, on exchange from collateral, and they'd been coming from wallets that had been funded from other exchanges that were clean and fresh and had no connectivity to other wallets that I was aware of. At least I label all the wallets that I'm aware of on Etherscan, so I can easily track everything. And these were all clean, fresh, unmarked wallets. And we are aware of, what some of the exchanges that we think had a role to play in this, but I would refrain from commenting at the moment because together with our institutional investors and partners, we are exploring whatever legal recourse we may have to support our community and the investors who have been in our opinion harmed and wronged here. But it is clear that there was massive forced liquidations in a low liquidity environment on a Sunday night. Again, we haven't been in touch with these investors who were liquidated. We're in touch with our institutional partners like Sharuk and Laser and so on. But
and to be clear, those partners have come out and said that they haven't also. Similarly, Sharuk and Laser Digital both posting saying that they weren't the ones who sold here. And so I guess, you've made mention a couple times of the low liquidity.
Okay, that's really interesting because I guess that video didn't really give us a lot of extra information that we didn't already know. So I guess I can take my, that's enough video. If we get another video to watch. Yurav says, very true. I think this is the new trend of building true coins instead of using existing tokens efficiently. People are just building new tokens unnecessarily. Yeah, I mean, I think everyone, I actually feel kind of that way right now about DeFi protocols on Algorand too. Oh, hold on. I just realized. I feel like that way on DeFi protocols on Algorand too. Like, I just don't feel like they do anything useful. Like, we just don't need another staking platform. There's plenty out there. Unless you do something different, you're just adding to the noise. And so interesting. We'll talk about the Gainify situation because I learned some more about it. We'll kind of go through what that is. But let's get back to crypto prices. Yeah, and Mantra, like, so it's supposed to be an RWA coin. I wonder what RWA projects are actually doing because we already have Algorand, and Algorand works really, really well. Europe says, Yuvra, is it Yuvra? Sorry, I might be mispronouncing it. I think this is a new trend, making new tokens instead of using the existing tokens efficiently. New way to raise money. Well, that's how I feel about a lot of the gaming projects too. Like, they just put out games. By the way, well, we'll get to that. We'll talk about Realms too, because Realms is kind of interesting. COVID lab leak confirmed by White House. Interesting. How did that come up for me? Oh, it's on the For You. Interesting. So that's the story with Mantra, and right now it was the #1 gainer, but it's if you do 7-day, it's definitely not, and that's why it'd probably be on the. Actually, right now, Flare is up there. Well, now it's gone. That's weird. Ohm just came up as like the #1, and now it's like not even on here. Yeah, now it's on 11th. Oh, look at that. You see that? This is Mantra. It's up like 3%, but was down 90%. That's crazy. Otherwise, Flare doing well. BitTensor for Immutable X, Artificial Intelligence Alliance, the Sandbox. really odd little grouping, Sandbox, Immutable X Gaming, and Metaverse, and kind of old gaming. Well, I shouldn't say old. I mean, old by crypto terms anyway, right? By the way, I moved my microphone position. Does that sound better? Because I keep bumping it. So I just want to make sure it sounds okay. Let me know in the comments. Yeah, even like Pancake Swap, that's an old school one. Filecoin, Flow, Polygon. Look at Polygon at 18 cents. Man, that was one of my worst buys. Polygon was one of my worst buys. I really fell flat on that one. I didn't want to tell you what I bought at. UVI is also fine. Uvra says, keep making videos, man. You're doing an amazing job keeping us updated. Hey, I appreciate that. I appreciate that a lot. Yeah, my Shiba, thank you. Mike is fine. Awesome. Shiba Inu, not so good. Ethereum Classic, or actually doing okay, but it was a lot better. Yeah, there's just not a lot to get excited about. If you look at what's down, Fartcoin. Okay, fine. I don't feel bad if Fartcoin's down. AB, Radium, Mantle. So a lot of these newer ones to the top 100 are kind of suffering right now. They're not looking great. But you're not seeing, I guess Ondo's on there, but it's kind of flat. So most of these coins are just kind of flat. I mean, look at Solana. Solana's actually up a little bit on 134. Had a nice 10% on the week. XDC down. Oh, Bob, where's Bobby Jonas at? My favorite XDC commentator. Look at that. Look at XDC falling down. Not doing great. What about, let's look at Hedera, and then we'll look over at Algorand too. Yeah, about 16 cents right now. Yeah, down on the week, had a nice little pump for a little bit and then falling back down. Working its way back up, but still at 16 cents. Community is you can't see it on here. Let me, community is very bullish. And you'll see this in Algorand, and it's been that way for a long time. Because if I go over and look at, well, in fact, we'll, no, let's do this. Hold on. Oops. Algorand's actually up 2%. Yeah, we're at 19 cents. But that's not what I want to show you. What I want to show you is, see, Algorand sentiment and Hedera sentiment both at 88%. That's something. That's really something. Uvra says, I just don't get why people invest or make meme coins, fart coins. It just makes the crypto industry a joke. At times, just my opinion, I would love to hear your thoughts on it. Yeah, a good point. Here's my thoughts on, here's what I think about meme coins. I think they're fine to play around with. I don't mind people making them. I know Algorand has a bunch of meme coins. I bought a few of those meme coins. They're, they have their fun. What I don't like seeing the celebrity coins because they're just guaranteed to be money grabs. That's all they're doing them for. They don't care about crypto. Maybe one or two of them do, but I'm sure the vast majority of them just see it as like another way to make money. Just like the Hawk Tuah. We covered the Hawk Tuah situation. And I think it was important to cover because if you see a celebrity attached to it, they're there to make money. You can guarantee that the sniper bots are in full force. And these are tech people who are at the cutting edge of this space. So as soon as you launch this thing, they are locked in and ready to take advantage of it. And they're going to take it from you. They're going to take that gain. You're not going to get it. The premise is that people think that they can beat the market. They think, well, I'll just get it now. And as soon as it pumps up, I'll just sell it right away. Yeah, but the problem is you don't have the sophisticated software that these snipers do. They are ready to go. They are locked and loaded. They will get it the second they're ready to take profit. The second it hits the right range, they've got it. They're gone. I mean, that's what happened with the Malay coin, the Javier Malay coin. And I would say if you're a celebrity, you should ignore every single if you should just not touch this stuff, because you're going to ruin your reputation and you're not going to gain anything from it. And I don't think these celebrities are necessarily in on the scam. I don't think they realize the scam for what it is. I'll be honest. I don't. I think they just see it as a way to make some money, and someone convinces them it's a good idea. The crypto people basically traffic in their name. They make money off of their name, and they pocket the difference, and the celebrity ruins their reputation. Some of them might. I mean, I don't want to say any of this is for sure. Some of them absolutely might be in on the scam and know it's a scam, or at least suspect it's a scam. Hawk Tuah was really interesting. Crypto is supposed to solve a problem. That's what makes them special. I think this is why crypto need regulations. Just imagine making companies on the New York Stock Exchange for jokes, right? You have to reach a certain... Well, that's a good point. Maybe there could be kind of a... Maybe you can't get into the coin market cap 100 unless you have some sort of metrics or some sort of transparency. I don't know. There's ways to do it. I know decentralization tends to, the philosophy tends to just not want regulation. I think that's a bad idea though, because I think we do need some regulation. What we had before though was regulation by enforcement. In other words, you don't get to know what the rules are. We'll just tell you the rules when we bust you for them. That's not a good way to govern anything. Well, speaking of Algorand, why don't we just look at the main chart here? And I suspect we're going to see something very similar to what we saw in the Bitcoin trading charts. In fact, actually very different. We're actually at the top of the Bollinger Band, or pretty close. El Mysterio says, greeting Algo Bros. What's up, El Mysterio? El Mysterioso, sorry. Welcome to the show. Good to have you here. Yeah, so we're just at the top of the charts here. I mean, so, just sit back and enjoy right now. We had that big opportunity here, which almost pretty much lined up with the Bitcoin one. Almost identical. You had this kind of double pop. Not quite as low RSI, because remember we were in 19. This one hit 21 at one point. I wish I could get rid of that plus minus thing. But you see what I'm talking about. Right there. So, yeah, why don't we see what some of the coins are doing? I was doing pretty well. Oh, yeah, here. So, okay. Well, let's look at Tiny, because Tiny is really important to me right now because it's a big part. Oh, on the weekly. Yeah, let's go to 4 hour here. This looks not so bad, and it's good compared to where it was. Getting right back to 2.5 cents. Snail, hope all is well out in public, slimming around. I get it because of the snail thing. Yeah, cool. Hey, thanks for popping in and saying hi. I appreciate that. So one of the things that I had really liked about Tiny is it kind of stayed in the 2.5 to 5 cents range, which made it kind of predictable. But lately, it's been since this month and actually even last month, it started to fall below that, which is kind of a bummer. So it's nice to see it actually coming back, working its way back up. I think they've been doing some burns, and that really helps a lot. The reason I like this, we can actually apply the indicators too, just to be. Oh, we have 4 hour, yes. Yeah, and this one too, I mean, nothing really tradable, and I don't really trade this anyway. Mostly this is just, this is how I'm taking my rewards. And they've been like, today's rewards were just a little under $3. I had been getting like $4 or $5, almost $6. So well, it was actually $4 to $5. And I will say back when it was algo rewards, I was doing quite a bit better. I was getting like $5, $10. Actually, I think at one point, I think one day I got like $15 in rewards. That's like some pretty serious, money to add to your budget. What else is doing well out here? In the last 24 hours, Vestige pumped up quite a bit. That's interesting. Look at that little candle up. Ooh, nice. Not so good for CompX, went down over the day, but up on the week, so some positive news there. Busk is still, I can't get rid of Busk out of the top. Is it 10? I think it's 10. 1, 2, 3, 4, 5, 6, 7, 10. Yeah, it's number 9. And then looking, Marcus falling a little bit. You know, Marcus is a big sponsor of the channel, and we really appreciate their sponsorship. So thanks so much, Marcus. We're also brought to you by Non-Fungible Domains, by the way. So I want to give a big shout out to them as well. Oh, there's an XRP coin now. What is up with that? Is it the same actual price? No, it's not. They just called it XRP. Something called Kosh. Yeah, it's going to start coming back down. When you see this, you've missed it. If you play around with these coins, you know, you're taking a gamble. So just keep that in mind. What's Orange been at? You know, I think I paid like a few dollars for my first Orange because I tried it out. I did it on channel. We actually streamed it on New Year's Eve 2 years ago, not the last year, but the year before. We actually streamed the Aura platform going live and trying it out, and it's been much lower. I will say, let's go to the weekly chart just to look out here a little bit. Yeah, that's what I was saying. Like this is what it launched at. Not really launched, but this is how much it costs to. So Orange, if you don't know, you basically mine Orange by operating the platform, which creates Algorand transactions. And so at first it was really expensive, and then it's supposed to get harder to mine, but it just got, you know, it just went down instead. It didn't really do much. I think I think this is where the halving happened. There was a halving. There's halving just like Bitcoin. It's supposed to get harder to mine over time, but that hasn't really translated into anything with the price. It's just a big drop. That's really common in ASAs, by the way. Well, let's see. Why don't we... Let's look at some news. So the thing I was talking about was with Coinbase. So you know, the SEC had dropped its case against Coinbase. It dropped most of its cases because they're refiguring out, especially in the crypto realm anyway, because they're refiguring out the rules. So basically the old situation did nothing with crypto regulation. They just had no rules, but they were happy to sue people anyway. And it's really bizarre. It was just a bizarre way to handle it. And it sounds like they were doing that kind of on the back end with companies too. So the previous administration was like just really unbusiness friendly. And I think it was a matter of control, that they wanted to control everything. And so does the new, I think the new administration wants to control things too, but just in a different way. And I think that's going to be good. But yeah, so Oregon Attorney General sues Coinbase months after SEC dropped case. Oregon Attorney General Dan Rayfield files a security enforcement action against the exchange on Friday. Since President Donald Trump took office, the SEC has drastically changed its approach to crypto compared to the former Biden administration. Yeah, we definitely know that. El Misterioso says, any thoughts on Algorand network? I like what they're doing, and the price is low. The price is very low. Yeah, we'll go back. We'll circle back to that after we finish this Coinbase news. Oregon Attorney General Dan Rayfield filed a securities enforcement action against cryptocurrency exchange Coinbase, echoing federal charges that were brought under the Biden administration but dropped earlier this year. We're clarifying these rules right now. Why don't you just wait until the rules are clarified? Why are you filing? First off, states, worry about your own damn state. I'm sorry, I'm like getting fired up. Worry about your own state. Like, worry about stuff in Oregon. There's plenty of issues you need to deal with in Oregon. It's a mess. You don't need to go after Coinbase. Let the federal government do its job. It's crazy. U.S. Securities and Exchange Commission dropped its case against Coinbase in February. In 2023, the agency charged the exchange with operating as an unregistered broker, exchange, and clearing agency, and claimed its staking as a service program was also improperly registered. And by the way, they asked like how they could get in compliance, and the answer was no. It's like, no, we're just not going to tell you. It's crazy. Oregon's holdout campaign is obstruction for the sake of obstruction. Coinbase Chief Legal Officer Paul Grewal said in a blog post Friday, and I agree, it is a desperate scheme that does nothing to move the crypto conversation forward, and in fact takes us a giant leap backwards from hard-won progress. I agree. I mean, it's stupid. Why are they... I just don't understand why they would have the right to do this. I mean, I understand they can find a way to, we have state rights, so it makes sense, but... Oh, sorry, I should have centered this better. There you go. Oregon's lawsuit says Coinbase encouraged and helped the sale of unregistered cryptocurrencies to people in Oregon. I'm sorry, is there a place that cryptocurrencies are supposed to be registered? Because I don't remember that as a rule. And said those assets were at risk to pump and dump schemes and fraud. After building trust with Oregon consumers, Coinbase sold high-risk investments without them being properly vetted to protect consumers. Oregon's lost money, and we believe Coinbase should be held accountable and take steps to direct consumers. But like what? That doesn't make any sense. Like, where is this coming from? Coinbase holds coins. You can choose to buy them or not, and maybe you'll make money, maybe you won't. That's just how crypto works. This is where I disagree with CoffeeZilla and some others like him. Like, they never put any responsibility on the people making the decisions to buy these things. Like, if I buy a coin, I'm evaluating its risk. That's on me. If I don't properly evaluate the risk of a coin, that's my problem. Now, if they actively lied about something, if they did something nefarious, okay, fine. But if it's just a bad investment, that's really my fault. And if I take a risky investment, it's up to me to manage the downside. So, where's the lawsuits against the casinos when people go and lose money on the casinos? Because casinos, you're definitely going to lose money. That's a lot different. That's a lot different than in crypto, where you might lose money, but you might not. With the casino, I mean, you're pretty much guaranteed to lose money, and they don't seem to care about that. I just find that really funny. Since President Donald Trump took office, the SEC has taken a dramatically different approach to crypto compared to the Biden-era commission led by Gary Gensler. Gensler had argued that most cryptocurrencies are securities and pushed platforms like Coinbase to register with the agency. Yeah, except there was no way to register. In recent months, because when they tried to say, well, what can we do to get in compliance, they just flat out said no. When they got the warn notice, they responded and said, okay, how do we get in compliance? And they just said they wouldn't tell them. I mean, it's insane. It's an insane way to handle crypto. And in recent months, the SEC dropped investigations into several crypto firms, including OpenSea, Kraken, Consensus, and Uniswap. Ubra says, I love the casino example. Yeah, well, exactly. Like, they allow that, and you're like pretty much guaranteed to lose money. Like, the way they're set up, like, you're just guaranteed to lose. The house is set up to win. And I'm a big fan of saying on this show, don't play games where the house is set up to win. Play games where you're set up. Align yourself with the house. If you can be aligned with the house, that's better. Like, Coinbase does well if crypto does well. So it wants crypto to do well. The casino doesn't want your games to go well. They want your games to go badly because they make money. They make money when you make a bet and lose. They don't make money when you win. Coinbase makes money when you win. That's a key difference. So, I mean, I think it's weird to be more concerned about Coinbase than to a casino. Anyway, meanwhile, lawmakers in Washington are moving quickly to pass legislation to regulate stablecoins and the broader crypto industry. Yeah, you definitely want those stablecoins regulated because they might, be $1. I know, Terra Luna. I'm not saying there are some sensible regulations, but like the federal government is working on a framework. So let them finish the framework first. It's just frustrating. Bipartisan momentum has never been stronger to pass comprehensive federal legislation for digital assets, legislation that would enable domestic crypto businesses to thrive while preventing rogue state governments from bringing politically motivated actions against the crypto firms, Grewal said Friday. Based. That's what I'm talking about. Based, Grewal. I like it. Yet instead of waiting for Democrats and Republicans in Congress to enact clear rules of the road, it's what I'm saying, Oregon has taken it upon itself to try to regulate a worldwide industry through enforcement. This is what I'm saying. This is exactly what I'm saying. It's frustrating. Okay. Anyway, that's the crypto lawsuit. I think I pretty much gave my thoughts on that. I think it's just a waste of time. It's just stupid. They should just dismiss it because these rules are being clarified right now. You know, once the rules are in place, then fine. You want to sue? Fine, sue. That's up to you. There's another good one on here. This one's from Ripple XRP. Every time I talk about XRP, someone gets mad, says I don't know what I'm talking about. All I did is gave an update on the SEC case because there was a new filing, and I talked about the filing, and so it was like, bro, you don't know what you're talking about, bro. You can't win sometimes. Yeah, it's part of the game. You know, all part of the game. Anyway, Ripple backs new XRP tracker fund by Hashkey Capital, signaling institutional push in Asia. Ripple will be seeding. Big difference there. Ripple will be seeding the initial investment as its anchor investor, according to a release shared exclusively with the block. XRP is the world's largest cryptocurrency by market cap, which currently stands at around 121 billion. Crypto fund manager Hashkey Capital announced Friday the launch of Hashkey Tracker Fund, the first investment fund in Asia designed to track the performance of XRP. Hashkey XRP Tracker Fund will be available to professional investors who want exposure to XRP without direct ownership. It offers investors the ability to push through cash or in-kind subscriptions and subscribe or redeem shares monthly. So people might wonder, why do you want this? And this kind of goes to what Silvio Macaulay's doing with the fiat chain. It's this idea that some companies just aren't going to want to own actual crypto, and that comes with all kinds of regulations, reporting requirements. It's easier if they can have exposure to it without actually owning it. And right now, actually, the rule clarification is really important because there's a lot of companies that are sitting on the sidelines that want to get involved in crypto, but just the signal of the fact that there's going to be regulations isn't enough. They need there to be actually the regulations in place before they're comfortable bringing it for their clients. So I think you're going to see once those rules get clarified, I think you're going to see a big institutional push toward crypto, and that could be very, very good for all of us. But that's why these kind of things exist, these tracker funds. According to the release, so they really put that in there. That's like the second time they said that, isn't it? Oh, maybe not. Okay. Hashkey Capital manages a suite of digital. Well, where did I put that? I guess so. Okay. According to a release this shared exclusively with the block, this is the first of many collaborations planned between Hashkey Capital and Ripple. Ripple will be seeding the initial investment as its anchor investor. It does seem a little, what's the word? Self-dealing maybe, but I guess that's kind of how Algorand has worked too in some ways. I think Algorand's tried to kind of distance himself now and be like, well, in some ways not actually. In some ways it's trying to be kind of an investor versus just giving out grants, which I think is probably pretty smart. So I guess it is, maybe it's kind of similar. XRP stands out as one of the most innovative cryptocurrencies in today's market, attracting global enterprises who use it to transact, tokenize, and store value, said Vivian Wong, partner capital funds at Hashkey Capital in the release. With the first XRP tracker fund available in the region, we simplify access to XRP, catering to the demand for investment opportunities in the very best digital assets. So the rest of this is all going to be like blah, blah, blah. This is how press releases work. There's like one bit of news and they pad it with a whole bunch of quotes and other stuff. Yeah, that's nice. I don't have a problem with XRP. I know some people, the one thing about XRP people is they're really, 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 what's the word? I want to say bullish, but it's even more than that. Like if you go to the XRP subreddit, in fact, let's do that. Let's do that. Yeah, here it is. Okay, so here's the post we just talked about. Are you promoting XRP? When do we stop buying and sell? Why are all the same XRP articles? Yeah, this one's funny, but you know, so much of it's all about price. Like there's never like, hey, here's a cool thing they're doing. This one is an exception, and that's why I covered it, because I think it's good. But frantically trying to create FOMO so everyone buys before it suddenly reaches 100, 10,000, 100,000 on some random date seems way more extreme for XRP than other crypto. I 100% agree. Although it, to be clear, like pretty much you see this for pretty much every crypto. And people like their coins. They like to, you know, they like to believe that it's going to, you know, skyrocket and make them uber wealthy. And, you know, I get it. We all want that, right? But it's crazy. Like I reacted to a video that XRP was going to go to 10,000. The logic was just insane. I mean, it was just absolutely insane. I couldn't believe how stupid the video was. And this was like 4 years ago, and it was like XRP is going to go to 10,000 by like next year or something. And the whole thing was like, oh yeah, it'll be used for payments. Well, you think it's the only one that's going to be used for payments? Like what guarantee is there of that? It was just one of the dumbest things I've ever seen. So yeah, this is a really common thing. It's common. The FOMO is the FOMO enhancement, not inducement. The FOMO inducement is pretty common in crypto, but it is worse than XRP, 100%. But everything is either XRP price or the lawsuit. Right, and here's ISO 20022 again. How do people not know this is total nonsense? ISO, there's no such thing as an ISO 20022 compliant coin. It just has nothing to do with crypto. And there's no compliance. There's nothing to be compliance to. It's like saying applesauce is compliant with the rules of Major League Baseball. It just has nothing to do with it. So a dApp built on ISO 20022 is a bank messaging standard. An app that is built on a blockchain that would be fast enough and secure enough to provide cross-border payments could use the ISO 20022 syntax in the app. That's possible. But the whole thing about compliance, there's just no compliance. But yeah, I just find this interesting. That you just don't see anything. XRP breakout, position for breakout, ETH flipping. Well, it's not that far away. I actually think this could happen. I don't think this is outside the realm of possibilities. I mean, it's pretty close already, and ETH is just really losing momentum. I think people are finally figuring it out that it's, you know, it's just not technically proficient enough to compete in the marketplace. That I think could happen, but you kind of get my point anyway. I want to talk about this Hyperliquid one here. Hyperliquid grabs 70% market share in on-chain perps, signaling shift from centralized derivatives. Perpetual protocol trade market share. You can see this from this chart. It's pretty interesting. It's just skyrocketing. Man, that really goes crazy when you... oh, you can isolate it. I see. That's why. It definitely took a share. So Hyperliquid has... Well, we'll just read the thing. Protocol's trading volume has shown strong momentum, processing 175 billion in March alone, with April already reaching 83 billion at the halfway point. The following is an excerpt from Block's data and Insights newsletter. Oh, I see. Hyperliquid has continued to build its commanding position in the perpetual protocol market, reaching nearly 70% market share in recent weeks, a significant climb from its position in early 2024. For context, perpetual futures or perps are derivative contracts that allow traders to speculate on asset prices without an expiration date, combining features of futures contracts with spot trading flexibility. Interesting. Unlike traditional features, perps maintain exposure through a funding rate mechanism that periodically transfers value between long and short positions to keep prices aligned with the underlying asset. Apparently, it's had a lot of momentum. 175 billion in March, April already reaching 83 billion at the halfway point. When comparing Hyperliquid's volume to that of traditional centralized exchange giant Binance, the ratio has climbed to nearly 10%, indicating the growing adoption of decentralized derivatives trading. The growth trajectory suggests a gradual shift in increased preference toward an on-chain perpetual solutions that have increased accessibility. Yeah, so that's very interesting. I'd have to look into that. I'm going to ignore that Solana. Well, no, I won't. I'll read it. And you guys know I'm not a fan of Solana, although I do like the Helium mobile phone service. I've been using that for like 6 months and it works really, really well. I'm not even dropping an affiliate link or anything. I'm just saying like it works really well. Not quite as easy to earn the rewards as it used to be. So I got it was free last month. I had to pay the $20 the month before. But even the 20 or 21 something that comes to with all the tax and fees and all that, that's still pretty good for like really good phone service. You know, I mean, you just kind of can't beat it. Galaxy proposes new market-driven voting system for Solana emissions following SIMD 228 rejection. Galaxy Research proposed providing a wider array of choices for voters in choosing deflation rates for Solana and deciding the outcome from the weighted average. The proposal seeks to address the polarization of votes seen in the case of SIMD 228. Anzo's Mac Resnick's raised the concern that voters would try to steer the result in their favor by voting to the extreme. And that's pretty common. Well, why would you not vote for the thing that benefits you? Like that's also why like I'm sort of skeptical of governance in crypto, because I think most people are going to vote. They're going to tend to vote for short-term gains for themselves versus like thinking long-term. And I don't really see why they wouldn't. I really don't. These crypto indices are interesting. All right, I want to go to Gainify. Is it gone? It might be gone now. Oh, no. All right, hold on a second. Yeah, I kind of want to just talk about this Gainify news because it's pretty interesting. I'll share this. So Gainify had made this, and I covered this on the channel, so I'm just going to briefly go over how we got here to talk about kind of what's the next steps. So the post was Gainify project is shutting down. That has changed now, so it's not. And then they told all users of Gainify app to remove their LPs. And they said there is a critical error in the contract produced by Leo that will eventually prevent people from unstaking their assets. Well, you know, there's a big update on that, so hang tight. Yeah, they talked about the contracting errors. Basically, they hired Leo and a couple other devs to produce this staking platform. So what you have is a staking platform that you had founders that were not developers, and they hired a developer to set up the website with the smart contracts in place. Now they claim and actually, you know, even the screen they shared, it's kind of funny because they make it sound in the post, they make it sound like Leo and the other developers are the bad guys. But even let's read this post, because they were saying that they didn't deliver a working app and that they were not willing to fix the app that they delivered that was broken. Leo said, reach out to the developer relations team at Algorand or pay Alan. Please and thank you. We love you, but we have zero investment or incentive in Gainify to do more than we were contracted for. We wish you the best of luck. I've made the update. I believe everything is in order. I really need to cut off our contact as it's taking up some of my time and I have a lot of issues to sort out. I suggest you just review what I'm doing in the GitHub commit and try to replicate it, or ask the Algorand team for help since it's something simple. You paid a very low price for a website that integrates with blockchain, honestly. And it is. It was like $2,700 at total, which is that's a pretty low price just for like a website, let alone the smart contract stuff. Yeah, we made several modifications, but from now on, it's become something I'll need to step away from. So the idea was, we said the flippant messages. I don't think those are flippant. So I was a little skeptical at first when I read this, because they make it sound like the point about having zero investment or incentivized in Gainify is problematic, as the errors produced by these two developers have led to a situation where the users cannot unstake their funds. I'm going to kind of walk through what happened, by the way. We'll get to that. Here's the total. The total is $2,700 to have 3 people working on a website with smart contract. That's incredibly cheap, and that definitely does not. There's no world where that would include ongoing maintenance. So they're just saying, like, yeah, if I'll kind of explain it. In fact, let's get to the other side of it here now, because I read that and I was pretty skeptical. I thought, there's got to be another side to this. This doesn't quite sound right. Oh, that wasn't even it. Hold on. It'll take me a little while to find it. In fact, here, we can go back to the share. I think that's the one. Yeah, I think this is it. Yeah, TLDR, I received a message 2 hours ago that the Gainify team is walking away from the project. They have sent me all the keys needed for the platform and a link to the Medium article that I personally feel paints me as a villain. I'm actually one of just one of 3 guys who were paid once a small sum to build something pretty complex and were expected to provide maintenance forever for free, which we did for several months. I think that's legit. We in our pay were also held hostage, although all items on their outline were met, and they pulled out a brand new outline with what felt like hundreds of random items we did not agree to. We're not going to read the whole thing here because, like I said, I've already covered this, but Gainify users, the Medium article is blowing things out of proportion. There's no critical error. It is pretty rudimentary box error. I have no idea why the team is walking away from the project entirely and deleted their Discord. That's a key element. That makes me really suspicious. Why would you not keep that up and have information that so people can go to it and see, oh wait, this project, there's something going on with this project? Or maybe if they were concerned about people getting their funds off, why would you leave the Discord up and have information about that on there? Why would you pull it down? It doesn't make sense. He said the funds are safe. I'll connect with Alan and Uruk on Monday and get started on an update, ready to push as soon as possible. So he kind of explained what happened. Basically, there's boxes where these smart contracts end up, and at some point, if too many people stake, it gets filled up and you just have to build another box. So basically he just had to make another box. The original example he used was that it was like you're mowing the lawn and a rock gets stuck in it. You just have to remove the rock and you can get going again. And I think what he means is like removing roadblocks, because what happens is he just had to, it's not like super fast to fix, but it's not like overly complicated either. It just takes a little time. So he's in the middle of a boot camp and he's been building. I think they said, if I remember right, they said they're not sure what they're going to do with it next. But it's going to be working and they're going to have it live. So Yeah, I mean, here, this is kind of the key element. I do not work for free. I do not work for tokens. I do not work for potential gains. If you pay me as a single sum, I will still be there to help, but know very well it is at my discretion to decide when a line needs to be drawn. I mean, it's just kind of a ridiculous expectation that you're going to hire developers and think they're just going to fix on ongoing issues. They seem to sort of, now the guys the founders seem to argue that it was never functioning correctly, but people were able to stake on the platform, and they had quite a few stakes on there, so people were using it. I just don't know if it's true, and they deleted the logs. Apparently, deleted the conversations between the developer and him, so we can't even see like what really happened, and I that's really troubling to me. So while I think there is a potential steelman of the other side that maybe it just never worked all along. It seems unlikely, and it seems more likely that what Leo is saying is correct, especially consider the details that were provided. And what he's saying here, it really matches the tone of the post that was in the Medium article, where they were saying, yeah, I don't think, he was saying, well, we love you, we want to help you out, but we can't just keep doing ongoing maintenance all the time. Based on the tone between the two, I'm tending to believe Leo and the dev team a little more, but like I said, I don't know 100% for sure. But I thought I'd give that update because I actually joined a space with Leo and we kind of talked about some of the stuff and walked through it. I thought it was a pretty interesting case. Bottom line, and it affects me a little because Marcus had coin on Gainify, and they're a partner of ours, so kind of a bummer, but good to kind of try to get to the bottom of this to some degree at least. And he's one of the three devs behind Algo Fund too, which I haven't really played around with much. I don't know why I'm sharing my other. All right. Well, guys, I appreciate everyone tuning in. It was a fun show. We covered a lot of ground today, a lot of interesting stuff today that we don't normally, maybe wouldn't normally look into. So I thought that was pretty interesting. But otherwise, I'm Frugal BC. Stay safe out there, guys.